Hey, so the end of the year is approaching, and this is the time of year I tend to get questions from clients and others about whether or not their newly found Social Security benefits are going to be taxed, such as in income taxation, like other income is. This could be federal, state, or local. Obviously, I'm not going to opine on state or local. And just the basics on federal, only because I'm not a tax professional. So I just like to give them the basics, and I'm going to share it here with you. And I'm going to give you the page that the SSA provides that kind of explains how you know whether your Social Security benefits that you're receiving are going to be taxed. And if so, to what extent. So it's all based on this thing called combined income. And you'll see the link to the page that I'm referring to. It's a really easy read. Combined income is your adjusted gross income, so your AGI, plus any non-taxable interest that you happen to enjoy on any kind of assets that would bear interest, plus 1/2 of your Social Security benefits. So fortunately, they don't count all of your Social Security benefits when coming to your combined income. Okay. So now when you get that amount, it will depend on whether you are individual or filing jointly. And the numbers if you're under a certain amount, you don't pay tax on any of your Social Security. That amount is $25,000 for an individual or $32,000 for a couple. And it's their combined income, right? That equation I just gave you. Now, if it's 25,000 or over, up to 34,000, then up to 50% of your Social Security benefits may be taxed. And if it's more than 34,000, up to 85% of your benefit may be taxed. What's interesting about the numbers, the 25 to 34 and the above 34, I don't know when that has ever changed. It's interesting that it doesn't get it doesn't get the same application of COLA as other things, even though in real time, let's say that 25 has been around for 20 years. I can't say for sure if it's that long, but it could be, because I feel like I don't remember it being anything different. And I've been here about 2 decades doing this. So if 25,000 was what they considered nothing should be taxed 20 years ago, and now we know 25,000 then would be, goodness knows, is it like 40,000 now? Why is COLA not applied to that? I don't know the answer. I'd like to know, because I think my gut says it's inappropriate not for COLA not to be applied. And COLA is inappropriately, in my opinion, not applied to other things too, such as SSI exempt amounts when you're working, earned and unearned income, that kind of thing. It's applied to other things such as our benefit, which is good, our benefits, but and it's also applied to SGA. So SGA is higher, but likewise, it's also applied to the cost of earning a Social Security credit, which are all in other videos if you don't know where those important factors are implicated in all of us ever receiving Social Security, whether it's disability or retirement. But in any event, so we just went through the individual. If you're earning under 25, I'm sorry, if your combined income is less than 25,000, you will not have Social Security being taxed, your benefits. 25 to 34, up to 50% of it will be taxed, or may be taxed, as it says here, may. And if it's over 34, you may have up to 85% tax. So that sounds like 15% is never going to be taxed, regardless. Filing a joint return with your spouse, it goes up slightly to 32, between 32 and 44,000. You can be taxed on up to 50% of your benefits. Below 32,000, if you have combined income together, your Social Security benefits will not be taxed. And of course, if it's over the 44,000, up to 85% of your benefits may be taxed. So it's not that hard to do that math. You could do it on a basic, probably on a basic piece of paper, and just estimate your, what your AGI is. Look at it, look at the the tax, the 1040, and you can get to it pretty quickly. So by and large, I find that the married people are going to be taxed, assuming one of them is working. Okay. Of course, if you're single and you're working and you're perhaps working while you're disabled but not exceeding the amount, presumably then you might actually get taxed on something. But the saving grace may be that when deciding what your combined income is, they ignore half of your Social Security benefits. So if you're getting, $30,000 a year in Social Security, only $15,000 is counted. So that's really helpful. But what isn't helpful is that COLA is never applied to these numbers. So, if 25,000, like I said, was considered, we shouldn't be SS taxing them if they have no more than 25 in combined income. Why on earth isn't that amount increasing every year to what it would be its actual real value today? So basically it's been kind of a shaft. That's the way I look at it. And if you are concerned about the taxation, know that you can fill out a W-4, is it? Withholding, and SSA can withhold a percentage of your benefit, just like an employer would on a paycheck, so that you can have less concerns about having to owe a tax at the end of the year if you haven't been having withholdings. I think that's a pretty good idea if you're the type of person who isn't setting some aside for the purpose of paying taxes later. I know a lot of people say, well, I don't want to be giving Uncle Sam any of my money for him to hold on to and make interest on when I could be making interest on it. That's true if you are the type that actually puts it in an interest-bearing account of significance, not these little tiny savings of, 0.5%. Although sometimes some of the accounts right now are pretty high, but if you're not the type to actually put it in there and make interest, then you're kind of barking up the wrong tree. It's kind of a moot point. So, it might just behoove you to do withholding if you don't think you're able to plan ahead and preserve that amount. You can get that document right online, the W-4. If I think of it later, I'll try to get it up to you. Okay. And tax preparers, professionals might be able to assist with, I don't know much about AGI and doing that stuff. But since it's AGI plus non-taxable interest, you can't really change what your non-taxable interest is now, presumably. And you can't really change what 1/2 of your Social Security benefit is when we're looking at the calculation, the formula. Can you affect your adjusted gross income in the last 2 months of 2023? I don't know. It's a good question to ask a tax professional. All right. Bye, guys. Have a great rest of your week and weekend. And I will chat with you later. Back to work.